The VWAP is one of the best trading indicators for determining intraday momentum. VWAP, meaning the volume-weighted average price, tells you a very important piece of information: the average price at which an instrument is traded over a given period of time. Basically, it's the total amount of money transacted during some period divided by the total amount of volume that traded over the same time frame. While VWAP is no holy grail, it's an effective instrument for differentiating between random, meaning choppy price action, and non-random, meaning trending behavior. That's why in today's video I will share how I use VWAP to time my entries, and I'll show you the precise pattern I search for when I'm day trading stocks. VWAP represents the market's true average price over the plotted length of time, most commonly a trading day, while the other popular technical indicators are displaying data based on the recent number of candles. The VWAP has a cumulative nature. That's the problem with periodic indicators like moving averages, for example. Let's say you selected a 10 exponential moving average or a 20 SMA to trade with. Data from beyond the look-back period you've selected is no longer factored into the calculation, leaving you with an incomplete picture of the market. VWAP's cumulative nature allows you to see the full picture develop over the course of the day while factoring in each candle. No piece of data gets left behind, as each transaction that has occurred should factor into how you interpret the state of the current market and what's most likely to happen next. Unlike traditional moving averages, which simply sum up the closing price of an instrument traded and divide it by a number of predetermined periods, the VWAP gives you the true average price of the instrument by additionally considering the transaction volume at a specific price. In addition to providing increased context, the cumulative calculation of VWAP prevents confusion regarding selected chart timeframes and indicator settings that exist in nearly every other piece of technical analysis. It doesn't matter if you use a 1-minute chart, a 30-minute chart, or anything in between. There is only one intraday VWAP. Flipping between timeframes will affect only the display of the VWAP behavior, but the calculation remains constant. The same can be said for periodic indicators, where a 20-period moving average on a 1-minute chart will often look drastically different than it would with any other period, like the 5-minute chart. The reason why VWAP is highly effective is because it acts like a magnet, either attracting or repelling the price. For this reason, VWAP indicator can help you to identify support and resistance levels. Since the indicator averages the total periods for the day, it has psychological meaning on the chart. If the price approaches the VWAP from below and starts hesitating in the area, then the VWAP may be considered resistance. If this happens in the opposite direction, then the indicator might be able to support the price, creating a bullish movement. Now that we covered the basics of VWAP, let's see how we can apply it to day trading and scalping. Considering that the VWAP offers dynamic support or resistance throughout the day, the trading plan would be to identify a probable trend that's expected to continue, and to enter the trade around VWAP area with defined risk. If you analyze any chart, you will notice that when stocks go on strong trends and get extended from the VWAP, they will at some point pull back before continuing the trend. Waiting for this pullback takes patience. Most novice traders chase the stock when it's going up and then sell for a loss because they bought when it was extended. The stock almost always pulls back to its VWAP at some point during the trading day. That's why it's better to wait for the pullback and don't chase the market. This gives you a better risk to reward on your trades and helps you to time your entries and exits. So the idea is to buy a retracement to VWAP after a strong upward move and to sell the retracement after a strong downward move. But this strategy alone isn't enough to record consistent results. Oftentimes, the price will cut through the VWAP with ease. It's not about taking a signal, it's about filtering and trading only the high-quality setups. The greatest value of a trading setup is not the entry it offers, but the stop loss it implies. For VWAP setups, our stop loss is always on the other side of it. A high-quality setup offers a reliable stop loss point that the market is unlikely to hit in the near future. The stop loss of a high-quality VWAP setup is often a solid support point in a bullish market or a resistance point in a bearish market. Remember this, a high-quality setup usually occurs at a key support or resistance level. A long trading setup at the support area is superior to one that is located in no man's land. A short trading setup is more promising if it appears as the market tests a resistance area. So there are two factors you should consider in assessing the quality of a VWAP trading setup. First is the VWAP line on your chart, and second, as we target a pullback of a stock, the 50% Fibonacci retracement. What I've found out when I was analyzing trends is that most major moves and many minor ones will eventually retrace to around the 50% level of the move. That's why I started to pay extra attention to these areas. To draw effective support and resistance levels using the concept of the 50% retracement, the key is the price move you choose. The price move must be a strong one that has momentum on its side. I primarily use only the 50% level, but for me it's an approximate 50% retrace. And that means if a valid signal forms near the 50% level, say anywhere from a 50% retrace to a 60% retrace, I will also count that as a valid retracement. Now the strategy is all about finding confluence between VWAP and the 50% Fibonacci level. For a long signal, we look for a bullish move that clears above a previous swing high with strong momentum. We mark out a retracement zone between 50% and 61.8% of the price move. And if the price falls down to the retracement zone and the VWAP offers additional support, we aim to buy a possible rejection of that area. In this example, we have a first strong upswing. We have consecutive bullish bars which rose above the last swing high. We drew the 50% and the 61.8 retracement levels of the bullish move. The area between them is the retracement zone. This sharp retracement found support at the VWAP, right in the retracement zone. The candlesticks that followed had lower shadows, implying bullish pressure. Thus, the confluence area between VWAP and the 50% zone was a valid signal and offered a high probability trade. Stop loss below the confluence area, and ideally aim for at least 1 to 1.5 risk-to-reward ratio. Please bear in mind that you should evaluate the market bias before assessing individual trading setups. The market bias trumps any individual VWAP trading setups. If you get the market bias wrong, regardless of the quality of the trading setup, it will not work out over the long run. For a short signal, look for a bearish price move that clears below the previous swing low with strong momentum. Mark out a retracement zone between the 50% and the 61.8 of the price move. And if the price rises to the retracement zone and the VWAP offers additional resistance, we aim to sell a possible rejection of that area. Here we have a bearish move that brought the market to a new low for today. With this bearish move, we drew a 50% retracement zone, which also aligned with the VWAP. As the price reached the confluence area, we had a trendline breakout which offered additional confirmation that the bears are in control of that area. Given the confluence of resistance levels and the VWAP, this trading signal was valid. More specifically, the entry timing offered by the setup was appealing. The advantage here is that the VWAP is more responsive to price movements on significant volume versus those with less money behind them. As the VWAP absorbs more price and volume data over time, it becomes more resistant to random oscillations and sudden shifts. Here are other examples of valid VWAP trades. One of the reasons I prefer trading with VWAP is its ability to eliminate the noise that occurs throughout the trading session. Knowing the price at which a majority of the volume has traded makes it easier to evaluate a good level to buy or sell. Also remember that the best setups often appear together or close to one another. By looking for a confluence of patterns, we are able to identify the high-quality setups. The point is that when you find clusters of trading setups pointing in the same direction, you find quality. An additional tip is to focus trading this setup on large cap equities with sufficient average daily volume, typically familiar names that move smoothly and follow VWAP levels. Also avoid pre and post market and the first 15 minutes after the open. VWAP tends to be jumpy and unreliable during those periods, while it establishes itself. Remember to apply money management rules when trading based on the VWAP indicator, and it wouldn't hurt to look for additional confirmation signals from candlestick patterns, chart patterns, or other price action signals. As always, if you learned something new and found value, leave us a like to show your support, subscribe to our channel, and hit the bell icon to stay notified when we upload new videos. Until next time.